back with us. And, you know, I so much appreciate you being here. I remember the depths of some really ugly market times, and you always were there for our viewers. And I appreciate you being here today.
It's good to be here, Scott. You know, I'll never forget, I think it was March 26, 2020, when we troughed after the start of COVID. And ironically, the last 35 days, the NASDAQ is down over 10%, which is the same as it was down in that period of time. We haven't seen this bad of market reaction out of the NASDAQ since the start of COVID. So this is a consequential time, and, you know, I always say to you, you know, you show up in the good times, you got to show up when it's tough. And today's a tough day. So happy to jump into it.
What is your reaction to what was obviously much worse than expected?
Well, as you know, I've been saying to you since January, I've said on our podcast, the BG2 pod, we've been very negatively positioned. In fact, the most negatively positioned Altimeter has ever been positioned over the course of the last 30 days. We started today at 5% net exposure to the market because we were worried that this was going to be a lot bigger than people thought. And we thought the White House was telegraphing that over the course of the last 6 to 8 weeks. I said on Squawk Box a few weeks ago, you know, in 2024, the total amount of tariff revenue to the United States was $77 billion. And I said on Squawk, if you think that's going to $700 billion, you know, which is McKinley-style, protectionist-style tariffs, you got to get out of the market, right? The market is not pricing that in. If you think, on the other hand, that Trump is more for fair trade, going to make adjustments to trade that's going to generate $200 to $300 billion in tariff revenue, which would be on the smaller side, then I think the market's pricing that in. And what we got yesterday was even bigger than the high end that Peter Navarro and Howard Lutnick had been, conditioning the market to expect. And so I think it was very surprising to market participants, as evidenced by the fact that we have massive gap downs in the market today. You see stocks down 20, 30, 40% today. The NASDAQ's down 5%. And I talked to probably 10 CEOs who are all in the business roundtable. These are CEOs of the largest companies in America overnight. And 201, they think this is a huge mistake. They think this is too much, that it will have lasting and cascading negative repercussions for the United States and the global economy. And so we're on the verge of hearing earnings calls out of the Fortune, the Fortune 100, out of the S&P 500. And it's very hard for me to think that any of these calls will have an air of optimism about them. Because whatever you think happened over the course of Q1, and I'm pretty certain that there was slowing in the economy in February and March, and that will continue into April with these announcements. But whatever you think has happened in the past, it's very hard for these CEOs to be optimistic or to plan for the future when we're in this fog of war about tariffs. They don't know what to do today. And I think that's a very dangerous place for the economy that was already slowing.
Yeah, I mean, a key question is, what the Fed is making of all of this.